The United States is the wealthiest nation on earth, with the largest economy and a GDP topping $30 trillion. But imagine waking up tomorrow and it's all gone. The stock market has collapsed. Your savings have vanished. Panic grips the street as uncertainty spreads faster than any virus. Would it be chaos in the cities? Would the government step in? And could society hold itself together? That's what we'll be looking at in today's episode of the Infographic Show. What if the U.S. economy crashes tomorrow? Day 1. All across the United States, a new day begins. It seems at first just like any other day, especially to the millions of Americans following their usual routines, heading to work and getting on with their lives. But this is a day like no other. This is the day the U.S. economy falls apart. Of course, an event like this doesn't just happen overnight or out of nowhere. There will have been warning signs leading up to this point. Leading economic experts, for example, have been predicting a recession or a collapse for weeks or months. News headlines have been dominated with the talk of economic downfall, the decreasing value of the US dollar raising fears around the globe. There's been the steady increases in living costs, with many goods and services costing more and more. Those rising costs are synonymous with inflation, and when inflation moves too fast and it isn't matched by relative increases in salaries, the risk of recession rises. Why? Well, because when prices of almost everything go up, the value of money essentially declines. In the recession of 2008, for example, household wealth across the U.S. plummeted by an astonishing $11 trillion. House prices also fell by up to 20% across the country, and people lost value on possibly their most important asset. When situations like that arise, average people aren't able to afford even the simplest goods and services they need to survive, like groceries and energy bills. That means less money poured into the economy, which weakens it further. Other factors will have played their part in the collapse also. Rising rates of unemployment and slow growth in the economy, possibly due to a lack of investment or a lack of confidence from America's allies and trading partners around the world. When you get all three of these factors combined, slow growth, high unemployment, and inflation, it leads to a phenomenon called stagflation. It's a really difficult challenge to deal with, as the usual methods to resolve it, like increasing interest rates, often make life even harder for everyday Americans with even more unemployment. And that's exactly what happened here. The U.S. economy sits in a troubling state of stagflation, and it's not going to get better anytime soon. In fact, it's about to get a whole lot worse. And the average everyday American is the one who will feel the effects the most dramatically in the early stages. Life is already tough for them before the collapse even begins. Let's say they have an average U.S. salary of around $66,000. They have mortgage payments to cover, energy bills to pay, groceries, healthcare, and childcare. It all adds up, and prices have been getting higher and higher in the recent weeks, but it's been a long time since they received any sort of big raise at work. So life is getting harder and harder for them. Every purchase feels bigger, taking more and more out of their bank account and leaving them with less money at the end of each month. They might have had hobbies or interests, or they like to travel in the past, but now they find that they're having to focus more on covering the costs of the essentials, leaving less space for more fun and interesting expenses. Sadly, their life is about to get significantly harder once the full effects of the collapse kick in. Just as in the 2008 recession and others throughout history, household wealth values are set to drop dramatically, alongside the values of important assets like property. Between 2007 and 2011, 1 in 4 American households lost a staggering 75% of their wealth. And this crisis is set to be far, far worse. Meanwhile, business owners and financial experts eye the stock market, anticipating the impending chaos. The stock market is generally seen as a great indicator of the state of the economy, and when it's doing well, that means that companies are generally prospering, investment funds are flowing in, and the economy is strong. But when the stocks start to collapse, investors cash out and the values of companies decline, all signs of an economy on its knees. And it doesn't necessarily take a gigantic shift to turn the tides of the stock market. A political event, a presidential election, the bankruptcy of a major company, any and all of these can encourage people to quickly sell off their stocks, and that often leads to a snowball effect. More and more people start selling, stock values decline, and panic sets in. Before anyone knows what's happened, billions of dollars of value have been lost from the U.S. economy. Companies that were in strong positions just hours earlier are suddenly crippled, having lost huge amounts of their value in next to no time. Even the richest of individuals, the billionaires in America, see their net worth plummet, as so much of it is tied up in stocks and shares. At the highest level, President Donald Trump will of course be kept informed of the changes as they happen. He'll have numerous financial experts and aides on his team providing real-time updates regarding the economic collapse. He'll be given predictions of what the coming days may hold, and perhaps even policy recommendations on ways to limit the chaos, even if it cannot be stopped. In the span of a single day, The once strong American economy has collapsed, but the worst is yet to come for all of those affected. Day 2. A day after the collapse, our average everyday American wakes from a troubled night. They are fearful for their job, their family, and their future. They have no idea what the days and weeks to come might hold, but the headlines in the news make for worrying reading. Let's imagine that as well as having the average U.S. salary, they also have an average amount of debt, around $105,000, and savings, just over $5,000. Much of their debt is made up of mortgage payments, but there are also credit card bills to cover, plus repayments on an auto loan that they took out to purchase a new car the year before. They know that if they lose their job, which suddenly feels more possible than ever before, they and their family could end up homeless. But as a simple citizen, they are powerless to do much about it. All they can do is head to work, hoping somehow that the situation improves and that they still have a job to go to by the end of the week. Meanwhile, an average American business owner also faces a chaotic and uncertain future ahead. Financially speaking, she's in a stronger position than the average American, with more money in the bank and various investments to fall back on. But on the other hand, it also means that she has much more to potentially lose as the economic collapse continues, with some very big and dramatic decisions ahead. For now, she keeps a close eye on the events, not taking any drastic actions right away, but preparing plans and worst-case contingencies for the days to come. But it's all at the top level in the White House itself that the chaos is at its peak. The stock market is experiencing its worst day in almost a century, surpassing the recession of 2008 and almost rivaling the Wall Street crash of 1929, which led to the Great Depression. The government knows that it needs to act fast, and it's up to President Trump to make the big decisions and stop the decline as quickly and as efficiently as possible. We can't predict exactly how Trump would act, but he would at the very least need to make statements and address the American people. They would be expecting reassuring words and promises of better days ahead. Behind the scenes, he and his aides would work on a strategy to solve the crisis, perhaps looking to past examples for inspiration. When the stock market collapsed in 2008, a big bailout bill, the Emergency Economic Stabilization Act, was passed, providing a colossal $700 billion bailout package for America's banks. Businesses that were teetering on the edge of ruin received a sudden cash injection to keep them afloat. In 2020, during the COVID-19 pandemic, something similar happened. The government handed out financial aid to businesses that were forced to shut their doors and cease operations. Even everyday Americans who were unable to work received financial support. In this situation, President Trump could attempt something similar. A big bailout bill might be enough to get the economy back on its feet. But it's not that easy. The 2008 bill faced a lot of resistance at the time. It was rejected by Congress at the first attempt and had to be revised before it finally passed. Trump could try to force through a similar bill, but he'd have to obtain bipartisan support, which could prove almost impossible. People on both sides of the political spectrum might vote against the bill. Representatives on the far right, for example, could argue that it's an unfair expenditure of taxpayer money. Meanwhile, those on the far left might demand changes to the bill to better support smaller businesses and individuals, not just the big banks and enterprises. Alternatively, Trump could take a different tactic. In recent times, tariffs have been one of the most used weapons in his arsenal. He could turn to them again, increasing tariffs on various countries around the world. The hope would be to strong-arm them into negotiating more favorable trade deals with the U.S. to restore investor confidence in the economy. Again, however, this method is easier said than done. Leaders around the world may react in various ways to tariff increases. Some may acquiesce and agree to Trump's terms. Others might retaliate aggressively. They could impose their own tariffs on American goods and weaken the U.S. economy even further. In a bid to fix the economy as dramatically and quickly as possible, Trump might decide on a multi-pronged approach. He could try to force through a bill immediately while also announcing tariff increases across the board in the hopes that at least one of those measures, if not both, could succeed. Unfortunately for him, the bill fails to pass, and other countries will take time to assess and respond to the tariffs. In the meanwhile, confidence in the economy will decline even more, with the stock market slipping into a weaker and weaker state. Day 3. By now, it's clear that this situation is going to get worse before it gets better. The average American discusses the situation with friends, neighbors, and colleagues. They hear worrying stories about supply chains starting to grind to a halt and stores running out of goods. So similar to during the COVID-19 pandemic, when people rushed out en masse and stocked up on items like canned food and toilet paper, our average American heads to the city using the money that they had to buy supplies. Of course, they're not the only ones who had that same idea. The stores are jam-packed with people, feverishly filling shopping carts and bags with whatever they could get their hands on. We haven't yet reached the stage of looting or riots, but people are clearly on edge, and stores are struggling to cope with the crowds. It's clear that this situation is bubbling up with a breaking point not far away. As the stock market loses more than 10% of its value, the business owner's worries deepen. They rely on a strong, stable economy and high spending power to sell their services. With people feeling the financial strain more than ever, the owner knows that her sales are about to drop dramatically. Revenue will plummet, and she won't have enough money to cover the necessary costs to maintain her business in its current state. Something has to change. Having looked at her budget as well as expected income and expenses for the months ahead, she reluctantly prepares plans to lay off a few of her lower-level workers. She calls an urgent meeting with key stakeholders, board members, and managers, informing them of the situation. She explains that if the current crisis continues or worsens as it's likely to do, the business cannot survive in its current state. It simply will not have the revenue to continue paying so many salaries, while also covering other costs. She asks her team leaders to break the news to their teams and start selecting possible candidates for termination. Some workers will have to accept shorter shifts and reduced hours on a temporary basis. Meanwhile, she and her closest advisors get to work on planning other ways to keep the business going, which might include expanding to international markets or scaling down their physical operations and doing more work digitally. In the upper echelons of the U.S. government, President Trump is having an increasingly busy day. With the stock market losing so much value, it's not just Americans fearing for the future of the dollar. Other countries around the world will also be impacted by this economic crash. The U.S. government operates on a deficit, a huge deficit. The country's national debt exceeds $36 trillion already, and a lot of that money is owed to entities in other countries. As the dollar declines, the creditors will naturally start to worry that they're not going to get their money back. Some of them might even call in their debts right away, demanding immediate repayment, out of fear that they'll lose their cash forever. At the highest levels, world leaders will be contacting Trump demanding answers. Is the U.S. economy truly collapsing? How bad will the situation get, and what does Trump intend to do about it? Day 4. A new day begins, but this one is different, and the biggest change is clear to see. Right from the start, the stock market has not opened. Historically, the stock market has only ever ceased trading in the wake of major events like the assassinations of presidents or the outbreak of global conflicts. The 9/11 terror attacks also shut down the markets for 4 trading days, and several halts took place during the COVID-19 pandemic, helping to stem the flow of sell-offs and value drops. It's also technically possible to close the markets when their values drop by certain amounts. To be more precise, the market halts can be initiated at -7%, -13%, and -20%. And that third threshold has been met, and the markets are closed down. Thanks to that, they won't lose any more money today, as nobody will be able to sell their stocks, but that won't solve the problem. In fact, it may only spread more chaos. Panic continues to spread amongst the population. Grocery stores and gas stations are overflowing with people. Huge lines form outside banks, where people, including our average American, waits to withdraw whatever money they might have, fearful of an imminent bank collapse and the possible loss of their life savings. The demand outweighs the supply. Grocery stores have to turn people away as they run out of stock, and even the banks begin to run out of cash on hand. Some even impose strict withdrawal limits to ensure that they can stay open and provide at least some level of support to their many customers. Unfortunately, this has an adverse effect of making people even more fearful. Our everyday American has to take whatever money they can get and stop by local stores to purchase more important supplies. As they wait in long lines, they watch as nerves fray and tempers flare in the crowds around them. The business owner feels the effects too. The supply chain is starting to dry up. Vendors and suppliers around the world are losing confidence in the U.S. Bills aren't being paid, and debts are rising. And the government's tariffs too have taken a toll, with certain countries outright refusing to ship more materials and supplies to the U.S. The business owner needs those materials, but delays and disruptions are slowing everything down. With the future looking bleaker than ever, the first layoffs begin. Worker morale inevitably suffers as team members are forced to say goodbye to one another, and many wonder if they'll be the next out the door. The business owner does what she can to manage the mood, but is already fearful of having to make more layoffs soon, or even shut down her company altogether. Inside the White House, President Trump fields urgent calls from world leaders. His tariffs are now straining relationships with key allies. Even longtime partners are pulling back, wary of investing in a collapsing U.S. economy. Behind closed doors, economic advisors scramble to pitch recovery plans, but none of them offer a quick fix. Every option seems to come with more risk, more instability. Meanwhile, public trust is evaporating fast. Protests grow louder. Confidence in the government is cracking. Day 5. At this stage, President Trump would likely have to resort to using executive orders to quell the decline. Politicians from both sides of the divide would still be negotiating over a bailout bill, but the president would have to take more urgent action to improve the situation somehow. As the stock market stays shut, he orders the Federal Reserve to print more money to cover imminent issues. But this has an adverse effect. the value of the dollar drops even more, and what was once a case of inflation rapidly becomes a case of hyperinflation. Fears also rise about the rising levels of U.S. debt. The U.S. always runs a heavy deficit and often borrows more money as and when necessary to cover costs. But that debt has a ceiling, and it's rapidly approaching. If the ceiling is reached, the U.S. will default on its debts and the situation would get much, much worse. Thus, an urgent call to Congress is made in a bid to increase the debt ceiling. Meanwhile, average Americans are feeling the sting of hyperinflation. They know all of their money, whether it be wages or savings, is rapidly losing value, and the cost of goods is only going to increase. They fear that before too long, they'll be priced out of even the most basic of essential goods. So the surge of crowds to bank and grocery stores continue. Stores would probably snap back into pandemic-style mode. Lines would stretch around the block, a limited number of people would be allowed in at once, and restrictions would be put on how many products they would be allowed to buy, especially with stocks starting to dwindle. On social media networks, our everyday American citizens may start to hear news of civil disobedience, riots, and looting in certain parts of the country. Tensions would begin to boil over, and it would only be a matter of time before crimes begin. Videos would start to go viral showing citizens battling over the likes of bread and bottled water, or security guards fending off aggressive shoppers trying to force their way inside. Social media would also likely be dominated by discussions of the situation, with many people sharing their opinions, leading to intense arguments and tumultuous online discourse. Other countries could even seek to take advantage of this. Bot armies deployed by America's enemies, for example, could be used to spread misinformation, stoke flame wars, or incite criminal acts like looting and rioting among the population. Day 6. Before the first week of the economic collapse is complete, the business owner may already be contemplating shutting their business down. With the supply chain dwindling, sales at an all-time low, and no clear signs of any imminent improvement, it may simply be too costly to keep the company up and running. They would, at the very least, have to impose large-scale terminations, laying off numerous workers and downscaling their operations significantly. At first, they might have pinned their hopes on a government bailout or a rapid resolution, but by this stage it would be clear that help was not on the way, and no quick-fix miracle was going to make their problems disappear. Any banks or financial institutions the business owes money to may also freeze loans and lines of credit or demand urgent repayments. This puts the business in an even more financial distress, forcing the owner to act more decisively and dramatically in their downsizing. In the government, President Trump waits to see the outcome of Congress's vote to raise the debt ceiling. The ceiling has been raised a total of 103 times so far in U.S. history, and this 104th increase could save the economy. Should the bill pass, the U.S. will be able to find some more creditors to support them, borrow some more money, and effectively wait out the crisis. But if it fails, the U.S. will default on its debts, dramatically decreasing confidence in the economy and sending global markets into a spiral. You would expect a bill like this to pass, given the stakes. However, politics is an unpredictable game, and tensions rise with heated debate on both sides and multiple objections and proposed amendments to the bill. The House of Representatives devolves into a hall of arguments, and even some of those within the president's party disagree with his plan and turn against him. The bill fails. The U.S. will default on some of its debt later that day. The ripples are felt across the globe as foreign investors rapidly sell off their shares of American companies. The value of the dollar drops even lower. President Trump faces a crisis, the likes of which America has not seen in almost a century. He knows that the country's enemies will already be plotting to take advantage of this moment of unprecedented weakness, and his administration faces almost impossible odds and gigantic challenges. Day 7. By the end of the first week, chaos reigns. The average American knows their days at work are almost certainly numbered. They've stocked up on the supplies they can, withdrawn what little savings they have, and are forced to think about drastic measures to keep their family fed and safe. With the U.S. economy seemingly getting worse by the day, essential goods are becoming scarcer and less affordable. Government subsidies and benefits like Social Security are no longer reliable. They could turn to family, friends, or neighbors for support, and some communities across America would indeed band together and help one another through the crisis. But not everyone would be so lucky. Our average American might even need to consider leaving the country behind and starting fresh somewhere else, like Canada or Europe. As they watch the news and the latest viral videos on social media of looters and rioters in the streets, they might see no other option but to flee. The business owner, meanwhile, would be on the brink of shutting down. Their staff is now reduced to a mere skeleton crew, carrying out the necessary operations to keep the company going hour by hour while watching their revenue and resources dwindle. They would have to handle the turmoil of having forced multiple hardworking and loyal employees into unemployment, as well as the imminent end of their business dreams. For President Trump, the situation would worsen. His approval rating at this stage would inevitably be at an all-time low, as the general public naturally blames whoever is in charge. As some of his most loyal and ardent supporters start to turn against him, and with America's power on the global stage waning, he would have to resort to more desperate measures to keep the country alive. That might include contacting allies in Europe or major trade partners in China, trying to assure them that the crisis would pass and that America would be back. Some allies would be understanding, others not so much. China could easily seize U.S. assets or cease shipments, further weakening the American position while strengthening its own. And the president's problems don't end there. With civil disobedience on the streets, reports of riots, and widespread protests, Trump may have to roll out police forces or even deploy the National Guard to restore order. Some would oblige, but some Guard members may refuse to participate, not wanting to turn on their fellow Americans who are already suffering so much. And that is just week one. In the days and weeks that follow, there's no telling how bad the situation might become. Cities could be ablaze with riots, mass brawls could erupt in the streets, protesters could even reach the White House, forcing the president into hiding as he scrambles for any solution to fix the problem. He could even seize the assets of the country's richest people, billionaires like his close ally Elon Musk or Amazon boss Jeff Bezos, if they hadn't already moved their money out of the country by that stage. Meanwhile, at an international level, U.S. assets are also seized. Deals with American businesses are canceled. Many markets stop accepting payments in dollars altogether, and America's biggest enemies profit from the situation, with China eager to take America's place as the world's leading economic force. Thankfully, this was all just a make-believe hypothetical scenario. There are many more ways a U.S. economic collapse could play out, with some being far less severe than others, and others being even more chaotic. However, that's not to say that a situation like this couldn't happen. The U.S. economy is in a delicate state right now, with the stock market experiencing some serious fluctuations and a lot of uncertainty. Many analysts and experts have stoked fears of an upcoming recession, so this fantasy scenario might not be so far removed from reality after all. What do you think? How do you imagine a U.S. economic crash playing out? And how likely do you think it is to happen in the not-so-distant future? Share your thoughts in the comments below. Now go watch Tariff That Destroyed the American Economy in Just Weeks, or click on this video instead.